Good morning, my fellow VP blockers. You got Larry here, day after Turkey Day. I hope we're all nice and full after a day of eating. I know I am. I gotta get to the gym today. Who am I kidding? I'm gonna have more leftovers. Watch the whole video. It's gonna be kind of a long video. You click this video to hear all the recon I did on the Dwac fund. We're actually gonna talk a little bit about Rivian and Black Friday shopping. So send this video to a friend. Tell them about the channel, small channel, trying to grow it, trying to spread that knowledge. Like I said, I'll put my email in the description if you want to email me, and we can talk about some of your ideas on certain things, on how, if there's certain things you want to invest in, maybe I can give you an insight on it, on if the blocker would do it, if I would stay away from it, if I would wait, or even just life things that's going on. I've been through a lot. I'm just here trying to help a lot of people out. Watch the whole video, like, subscribe, recon. Let's dig into the Dwac video. Now, 1 month Dwac review. Here we go with the meat and potatoes. I believe in the last video, I said it was currently trading at $66 1 month ago on October 26th when I made that video. Well, fund is down 54% in 1 month. What did I say? It's a money grab. Okay, it was a money grab fund. It's down to like $43.15 and it's going to keep going. Oh, and there's a lawsuit against them. People are starting to file lawsuits, class action lawsuits. You can go on Yahoo Finance, any type of brokerage statement. When you go inside the news column, there's a lot of people filing lawsuits. Here we go. Where are they located? 78 Southwest 7th Street, Miami, Florida. On Yahoo Finance, they even put the phone number up here, 305-735-1517. Their sector, financial services. Their industry. This is interesting. Industry is shell companies. Shell companies. You know what a shell company is? It's when you're putting money in one place, trying to hide it from people in another place, and it goes from here to there to here to there. There's no real, it could be a mailbox, okay? It could be a mailbox for where the money is really supposed to go, and you won't know where it's going because it's a shell company. Now, I did some recon. I typed in this address in Google Maps. It shows the street, everything. The building looks abandoned, and it's on realtor.com. If you type in this address, it comes up under Zillow, Realtor. I don't know if somebody's using this building as a shell company, but used to work out of there, and it's saying that the building is available to rent or buy. So I don't know how they're there if the building is there to rent or buy. Their chairman and their CEO, Patrick Orlando, you type in his name, it says that he has a firm in Wuhan, too. That he lives in Miami, but he also has some type of firm or business in Wuhan, China. I don't know what that's about. It's not much on him. And their CFO is Mr. Luis Orleans Braganza. Now, that's an interesting person because he's a Brazilian politician out of São Paulo, Brazil. How the hell is he the CFO of this? Like, he's in São Paulo, Brazil. Like, what does he have to do with this? I don't understand that, which I said it's confusing. If you can't reach anybody, I try calling this number. It goes to like a Google voicemail. The person's not available to talk. I don't know what type of business you're going to throw your money in. They don't even have a receptionist. And when you look under Yahoo Finance, it says their company employees, 0. They have no employees. They have no employees work for them. All right. Now, when this ETF first came out, it was sketchy, very sketchy. And people still put their money into it. That video I made about the Dwac fund, I talked about SPACs. I talked about IPOs, how you never want to put your money in an IPO because an IPO is a money grab. A lot of people don't understand what an IPO is, an initial public offering. You don't understand, a lot of insiders say if they hit the market at $78 a share. A lot of insiders, they got their stocks at pennies on the dollar. Maybe they got their shares for $1, $2, $3. They'll never offer them to you or me. You'll never get the original download price. They give those to like Puff Daddy, Shaquille O'Neal, Jim Cramer, big firms. Two big firms, once they went public, two big firms, like I said they would, yank their money out. Two huge firms, Google this, two huge hedge funds, once they went public, they took all their money out. They made their clients money and they went to the next best thing. They took all their money out of this. Hold on one second. Let me just sip a little coffee. Black, of course, strong. Now, you never put your money in a SPAC, especially one that doesn't have, so many people didn't even do no research on this. They look at the TV and they go, oh my God, there's an ETF coming out, but they don't look at the meat and potatoes of it. Pretty much it's a shell company. You gave your money to a fund that crashed already. Now, is it up? It's still up, but what about the people that put their money at the tippy top and it crashed? They're never going to get their money back out of this fund. I can tell you right now, your money's never going to come back out of this fund, right? It's down 54% since the last time I made this video. If you would have listened to the original video, you would have saved yourself a bunch of money. I don't even know if I can get in trouble for making a video like this. I probably can, but who knows? Disclaimer, I am not a financial planner. I am not a financial analyst. I am not a life coach. I am not a therapist. I'm just someone that's trying to call out people who are taking advantage of people who are uneducated. You got a lot of uneducated people that are throwing their Social Security, their pension money, their last couple dollars in this fund because they think, because I'm not a supporter of any one politician. I think they're all slimy and scumbags, and I don't trust no politician. They're all full of lies. But Trump's face was on this. You can't sue Trump. I can guarantee you Trump was just an endorser. Trump's probably made money off this, and he took some money out of this. This was a money grab. This was a shell company that you'll never be able to figure out where it's exactly located. Take the time and Google the address yourself. 78 Southwest, tongue twister. 78 Southwest 7th Street, Miami, Florida. Google that address. Tell me if that looks like a building of $1 billion market cap that it's at right now. The street looks kind of sketchy to me, and people are throwing their money into this. We're also going to talk about some other things. We're going to talk about Rivian. Again, initial public offering. What happened? Rivian hit the market, skyrocketed up in value. And what happened? Ford says we're no longer doing business with Rivian. Convenient. After the IPO and the fund or the company skyrockets in value, Ford says that they will not be doing any business with Rivian, and that they're going to take their money out of the. Of course they are. Companies can raise money too. Companies can throw money into SPACs and then raise money. Why would Ford join forces with the competition? Ford already makes electric vehicles. Why would they join forces with Rivian? See, here's what people don't understand. Even when they talk about Bitcoin and stuff, people don't understand that hedge funds, they're allowed to throw money in the next biggest thing to try to raise their returns. They're allowed to do that. They're allowed to throw it into Bitcoin and ride it out for a year and then yank their money out. I was looking at the futures of the stock market today, right now, before it even opens. Yo, it's down. It's down a lot. People are going to run out of money after the holidays. There's no more free money coming in, right? There's no more free money coming in. When you start looking at these weird, crazy ass funds, this QYLD. Now, this is a new fund, a covered call fund. I looked at this fund, this QYLD. People don't look at the turnover rate. If you have this in a brokerage fund, you're going to get hit with taxes at the end of the year. This fund is constantly selling on your behalf. They're selling stocks, they're buying stocks. That generates tax headaches. This turnover rate, it's volatile, it's up and down. A simple S&P 500 fund from any brokerage, any reputable brokerage, your Fidelity, Charles Schwab. I'm not being paid to endorse any of these people. It's just that, here's some of the people that I use: Fidelity, Charles Schwab, Vanguard, T. Rowe Price, Prudential. Your simple funds, your S&P 500 and your total stock market funds, they're less volatile. Their fees are low. It's a set it and forget it. You can have a fun with them and not worry about it, not always look at it, because now this fund has been around since 2013. Okay. They have 104 companies in their fund. Why would you do that when you can have the top 500 companies or the top 3,500 in the total stock market index, and you have all the companies? All right. Why would you have a fund where you only have 104 companies? Okay. This is one day your fund to be like this, and the next day it'll be down like this. Let the stock market crash 700% or 1,000%, and this fund will go nuts. They'll start selling and doing a bunch of crazy crap because they don't know what they're doing. I'm telling you, fund managers don't know what they're doing either. They're just trying to make a buck. A lot of their money is based on bonuses and returns, so they're trying to roll the dice too. There's a lot of craziness going on in the stock market. Got a lot of craziness. And take a look at Black Friday. When you see people lined up going crazy, fighting each other for stuff in the stores, that's how the stock market is. That's how companies are jockeying for position, and that's how people are trading. Those same people that are in line trying to get that TV, those are the same people, those crazy ass people, they're buying into selling stocks. Your smart people are sitting at home like myself, like, I'm not standing in that shit. I'm not wasting my time. Why would I stand in line for a product? Now, your stores aren't stupid. They raise the prices during Black Friday because they know people are going to grab them anyway. The best time I find to believe for me to buy an electronic, a car, a toaster oven, an air fryer, the best time? January, February, March, and April. You want to know why? Because people are broke after the holidays. They overspent for Christmas. They overspent for Thanksgiving and all the foods and all the turkeys and all the fixings. They went out and spent so much money on little Johnny's PlayStation 4 or 5. I don't even know what's out right now. And they're broke. They're paying off credit card debt. You can walk into these car dealerships. Maybe not during this current time, but you could walk into a car dealership January 7th, January 8th, January 10th, and steal a car off the lot. Get it for what you want, below sticker, anything. They have clearance after Christmas sales because stuff that came in late, all deliveries that came in late, it's still on the shelves and they got to sell it. So now it's even cheaper than Black Friday. Listen to me, please. Disclaimer, I'm not a financial planner. I'm not a financial guru. I'm just someone who screwed up a lot in his life and trying to help you people not do the same thing. You want to know why I tell people to stay away from SPACs and IPOs? Because I've gotten burned by them in the past. I've invested in some of these years ago and gotten burned. That there's a saying, everybody invests in SPACs because they know they missed out on the first Google, the first Microsoft, and the first Apple. But what you don't understand is the other thousands of SPACs that went out of business. You missed out on those companies, yes. But guess what you can invest in still? Those companies, they're great companies that have taken over the world that you can keep investing in. Microsoft, Google, Facebook, or Meta. You can invest in those companies because they're proven. There's no workers for the Dwac fund. No one's even answering the phone. No workers. So if you can't get nobody on the phone, how you think you're going to get your money out? People are going to yank their money out of this fund. I'm telling you, Rivian. There's too much competition out there. You got Rivian, You got Tesla. You got Ford making EV vehicles. GM. Dodge just said after 2023 they're not making no more Hellcat engines. They're going fully electric. We may be in an EV bubble right now because everyone's following the leader. Everyone wants to be like Tesla. People are modeling their cars after Tesla, but Tesla is crazy overvalued. We're in crazy times right now. So, this is what I'm doing. My funds that are dollar cost average right now, like my autopilot funds, those are going to keep going forever. Am I throwing any extra money into the market right now? No, I'm not. I'll tell you right now. I'm stacking cash. Oh yeah, I'm stacking cash, baby. I'm stacking cash because when those markets come down, you want to be able to get some good stocks at a deal. I might even buy some real estate. I may, who knows what I'm going to do. I may have another, a project car, that I put up here. But you want to insulate yourself from the dumbness. I'm not doing no extra. I'm doing videos on trying to help people, but I'm also not throwing any extra money in unless I'm dollar cost averaging, or if I see some dividend stocks that are trading deep into the red, I'll buy maybe one or two. But I'm not going heavy in the markets right now. I can't do it. My gut and my heart won't let me do it. So I'll leave my email in the description. Hit me up, email. We can talk about it. You could tell me what's going on in your life. You could tell me I've been through it. I'm telling you, I've been through it. I hope you made it to the end of the video. So like, subscribe, hit the notification bell, email me, and I got you. No regrets.